Hello everyone and welcome back to another market update. In today's video, we're going to take a closer look at XAUUSD gold, particularly the current on market structure following this very strong bullish move. Looking at the chart, we can clearly see that gold is still maintaining a strong bullish structure. Price has continuously broken previous high, creating multiple BOS break of structure signals, and it is currently trading around the 4,596 area. So, the key question heading into next week is, can gold continue pushing higher and create another new high? Or are we approaching an area where we should start preparing for a deeper correction? We'll go through the overall market structure, the key liquidity zones, and finally the two main trading scenarios that I'll be watching next week. First, let's zoom out and look at the bigger picture. Before the current bullish expansion, price went through a period of consolidation at the lower part of the chart. The first important area is around 4,120 points. This is where we saw a clear change in market structure, which I mark on the chart as a ChoCH change of character. Once price broke above this structure, the market started transitioning from consolidation into a bullish trend. And more importantly, after the ChoCH, price didn't just make one bullish move and stop there. We continued to see multiple breaks of structure to the upside. The first BOS appeared around the 4,300 area. Then we had another BOS around 4,360 points. And after that, another BOS around the 4,440 area. This tells us that buyers are still in control of the overall market structure. Now let's focus on the most recent price action. After creating a high around the 4,420 to 4,440 area, gold experienced a relatively strong pullback. However, instead of completely breaking the bullish structure, price returned to the area I've marked as OB plus liquidity, roughly between 4,325 and 4,355 points. This is a very important zone in my view. As soon as price reached this area, we saw buyers step back into the market almost immediately. If you look at the bullish expansion from this zone, the momentum is very clear. Price quickly moved from around 4,350, broke above 4,440, continued through 4,500 and eventually pushed toward the 4,600 area. So, at this stage, the order block below is still doing a very good job of acting as a strong demand zone. If we focus purely on market structure, my current bias remains bullish. The reason is quite simple. We had a ChoCH followed by a sequence of higher highs and higher lows together with multiple breaks of structure to the upside. Most importantly, the latest correction did not break the key bullish structure below. After taking liquidity and reacting from the order block, buyers pushed price higher and created another new high. So at this point, I don't have enough confirmation to call this a bearish market. However, there's one important thing we need to keep in mind. Price has now moved significantly away from the main demand zone. That means the trend is still bullish, but the current price is no longer as attractive for new long positions as it was before. These are two completely different things. Just because the market is bullish doesn't mean we should FOMO into a buy at any price. On the upside, the first area I'm watching is around 4,600 and the recent high between approximately 4,620 and 4,630 points. This is where price recently created a new high before showing some signs of rejection. If price pushes back into this area next week, I'm not going to sell simply because the price looks high. What I want to see first is confirmation. For example, price could sweep the recent high, take the liquidity sitting above it, and then fail to hold at those higher prices. After that, if we see a bearish ChoCH or a bearish break of structure on a lower time frame such as M15 or M5, then we may have a potential short-term sell setup. The first target for that correction could be the small OB around 4,510 to 4,530 points. But remember, any sell from this area would technically be counter-trend against the bullish hold structure. So I would treat it as a shorter-term setup, wait for proper confirmation, and manage the risk more aggressively. On the other hand, if you ask me where I would be more interested in looking for buy opportunities, the first area would be the small OB around 4,510 to 4,530 points. This is the nearest demand zone formed before price continued its expansion toward the current high. If price pulls back into this area and gives us a strong reaction, this could become an interesting zone to look for a continuation buy in line with the whole trend. But again, I want to emphasize one thing. Price touching an order block does not automatically mean we should buy. I still want to see a reaction. That could be a liquidity sweep, a strong rejection, or a bullish ChoCH or BOS on the lower time frame. If this small OB is completely broken, then the next major area to watch would be the deeper OB plus liquidity zone around 4,325 to 4,355 points. This is the stronger demand zone and the area that previously generated the major bullish expansion. Now let's put everything together into two simple scenarios. Scenario 1, main scenario, bullish continuation. This remains my preferred scenario as long as the whole bullish structure stays intact. I don't want to chase a buy around 4,600 points. Instead, I would rather wait for a pullback. The first area to watch is 4,510 to 4,530 points. If price returns to this zone, respects the area, and we start seeing bullish structure developing again on the lower time frames, I'll be looking for potential buy opportunities. The first target would be a retest of the 4,600 to 4,630 high. If price breaks through those highs with strong momentum, then we could potentially see another bullish expansion toward higher price levels. Scenario 2, reversal divide deeper correction. The second scenario becomes relevant if buyers begin to lose control. For example, if price fails to create another new high and then moves lower, breaking through the small OB at 4,510 to 4,530 decisively, I would become more cautious about looking for new long positions. If we then start seeing bearish structure developing on the lower time frames, the market could enter a deeper corrective phase. In that case, the next major area I would be watching is the 4,325 to 4,355 OB plus liquidity zone. If even this area gets broken and price starts closing clearly below it, then the bullish hold structure would finally begin to show more significant signs of weakness.